Okay, moving into 2021. First one, what are the main functions of money? Only what? Not to outline, not to explain, nothing. What are the functions of money, guys? 4 marks. Easy, no? Why are they even asking this from a A-level student? Could have been an O-level question. Now, so money acts as what? Right? Functions as, you write the full form, guys. Functions as a medium of exchange. Functions as a store of value, right? Or you can say store of wealth. Functions as a unit of account, right? And also as a standard of deferred payment. So you write the 4 functions properly, you will get your 4 marks. You don't have to explain, or you don't have to do anything. Okay, so you say those 4. Now, question 2. What are the factors that might affect the money creating potential of the banking system? In other words, the credit creation potential. What can you say the factors that can affect the credit creation potential? Again, very easy, guys. Give me a few. They're saying what? No. So you just have to state. What can you say? We'll start with the very beginning, guys. The very first thing that affects the amount of credit that the bank can create is what? Is the demand deposits, no? Is the deposits that the bank receives. So if the banks receive more deposits, they can give out more loans and create more credit. Okay, this is not exactly the assumptions that they're asking, but assumptions also come into play here, right? But the first you can start off with the number of deposits. That's the most obvious thing. So the more deposits they have, the more credit they can create, the more money that they can create. So you know, the deposits that the banks receive, this can be one. Okay, then what about this? No matter how much deposits they get, if there is no demand for loans, if people don't like to borrow, if there is no demand for loans, will there be credit creation? No. Then you can say demand for loans, right? Demand for loans. And then what if this, guys? Now, what if people try to keep money with them? Liquidity preference. People don't like to put money in the bank. They like to keep money with them in the form of cash. So even things like that, right? You can say, you know, people preferring liquidity, right? Liquidity preferences, or you can even connect this and say, you know, cash drains, right? Cash drains, all of that. Then you can say, okay, the statutory reserve requirement, because if the SRR is high, the banks can't create much money because they have to keep a huge amount as SRR, required reserves. But if the SRR is very low, then they can give out big loans, they can make more money. The SRR. Then you can even say, along with this, you can also connect this with any excess reserves the bank might have. Okay, you don't have to go in detail now, because they are only asking what are the factors. They are not saying outline the factors, they are not saying explain the factors. When they say what, you can write short points, guys, more than enough. Is that okay? See, again, a very easy question. More of yes, maybe lack of financial knowledge. Yes, fine. Third one is liquidity preference. That is whether people like to keep money with them or whether they like to deposit. So if they like to keep money with them, then banks can't get credit. Okay. So the question 1 was also very easy. Functions of money and this thing. Guys, don't you think for these two you can get 4 out of 4, 4 out of 4? Don't you think 8 marks are sorted from your 20-mark question? Sorted, no, kind of. Okay, at least this. Okay, the second one, at least if you get, let's say, even 3, let's say, at least 7 out of 8 is done. The first one you can easily get 4 out of 4. I mean, if you can't get the first one 4 out of 4, that is, you know, disgrace. Yeah. Then the next one. Then interesting one is also very easy one, Lamai. How does a commercial bank manage its asset structure in pursuing 2 conflicting goals? Guys, what are their 2 conflicting goals? You start off with that. Price stability, not the commercial bank goal, that is the central bank goal. Commercial bank's goal. One is having what? One is ensuring profitability, right? Increasing their profitability. What is the other one? profitability. The other one is right, having what? Having sufficient liquidity, no? So profitability and having liquidity. So you can say having sufficient liquidity. So these are these are the two conflicting goals of a commercial bank. So then lamai, from the now their asset structure. Remember I told you, remember in the mock exam series also we talked about, in the commercial bank, okay, they get liabilities. Now what are their liabilities? They get there is nothing called import, it balance both, okay. They get demand deposits and all of that. So from this 1,000 they get, now they have to sort out how many of it do they keep as reserves. That is their ensuring liquidity part, right? Having cash with them. How much? Now this is called liquid assets and earning assets. So earning assets are government securities, loans, right? So this will increase their profitability. So from the 1,000 that they are getting, now they have to see, okay, if they put the entire 1,000 as reserves, what will happen? Liquidity will be very high, but there will not be any profitability. So entire 1,000 as reserves means all the money is inside what? All the money is in the safe. If they give the entire 1,000 as loans, then there is no liquidity, there is high profitability. So what should they do, Lamai? They have to manage the two. So how do you start your answer? Now it's a 6-mark question. You start your answer by saying what the two goals are. Say this and this. Then you explain what is profitability. So you can say, a commercial bank is, let's say, usually a private, maybe not a private sector business. There are public banks also, no, right? So one of their main goals is ensuring profitability for what? For their shareholders, no? For their shareholders, they have to give profits. They are also business, no, guys. Banks are not social services. So they need to make sure there is some sort of profit. So in order to make sure there is profit, what will they do? A portion of their assets would be invested in what? Would be invested in, let's say, would be given out as loans, or would be invested in government securities. So doing that will do what? Doing that will increase their profitability. However, on the other hand, what happens? When they try to increase their profitability, if they keep on giving more and more loans and more purchasing government securities, what can happen? So you say how it's conflicting, guys. How these two are going the other way. So when they try to increase their profitability, give more loans, purchase more government securities and get interest from that, on the other side, you can say their liquidity goes down. Then the next paragraph you can say, to maintain sufficient liquidity. This means having enough money with them in case a customer comes and asks, demands for the money, that they have enough money to pay out the customer. That is what you say, ensuring liquidity. So when they try to keep more reserves with them and make sure that their liquidity is high, on the other hand, what happens? If they keep more money with them, that means they can't earn anything. No? Keeping money in the safe as liquid assets is not going to give them any return. So on that end, what happens? Profitability goes down. So you need to explain that in another paragraph. See? So your first paragraph talks about what are the two objectives. Second paragraph talk about, okay, look here, when you're going to ensure profitability, you can do things like this. But however, when you do that, liquidity goes down. Then third paragraph talk about, okay, to have more liquidity, you can keep more reserves with you, you can do this. But then on the other hand, when you do this, your profitability goes up. Your 3 paragraphs. So then your final paragraph you can give, Lamai. So what should the banks do? They have to maintain a balance in their asset structure. They should not give entire thing as loans and increase their profitability also. They should not put the entire thing in reserves and increase the liquidity also. So what should they do? They need to have a balance. So how will they balance this, Lamai? Based on their past experience and all. Now they usually know, usually for the last 10 years, daily our withdrawals in the bank has been this much. So, based on that, they have that, no? They will keep a small buffer amount also, and they'll keep that as liquid assets. They are not going to keep all 100% cash they have with them as liquid. And then what they would do, and even when maintaining profitability, Lamai, again, there also they can manage liquidity. You know how? They can, for example, right? They can, for example, when they're, let's say, to maintain liquidity, Lamai, they can give out, let's say, short-term loans. Let's say small bank overdrafts kind of stuff. Now, That will ensure profitability. And if you want, you can soon ask the business back. Bank overdrafts are on demand, right? You can get it back whenever you want. Or maybe you can invest in short-term treasury bills, 3-month treasury bills. Now, instead of putting in long-term assets like, let's say, treasury bonds for long-term, or let's say, buying property, or compared to those, you can put it in short-term stuff. So that's how they will manage this lamai. So based on their experience, based on their past performances, they will see how it works, and they will have a right mix between how much they keep as let's say liquid assets, then even in terms of profitability, how much do they put in long-term assets, how much do they put in short-term things like treasury bills, right? They manage it properly, and that's how they get things done. So you need to talk about that in the last paragraph. If you can do that, Lamai, you're mainly sorted. Required reserves, yes, those are the main liquid reserves that they have. Any questions? Fine. It is bank overdrafts, you said. Bank overdrafts, is it? Bank overdrafts, guys, not overdrafts. Overdrafts. Remember, bank overdrafts you are learned for business. Then we'll get into the next one. Question number 4. And now see, this is the current context question. Now, this kind of question can come in your year as well. Okay. Now, in 2021, they asked. Now, see, there is a high probability. Now, I'm telling you guys, in 2021, there was a current context question. 2022, last year, with so much of happening, they didn't really ask a current context question. It looked like current context, but it was not. So, your year, there can be. Most likely, the question is going to be on how the monetary policy, how they controlled inflation using the monetary policy, which we have done so many amount of times in the mock exam series. So properly go through those answers which I have typed and given. Framework shape, right, can be, but more current context is how they controlled inflation, how they, remember how they increase the policy rates, how they increase the SRR, how they, put interest rate, all of that, and how they did that. There is a question. Go through. Okay, what are the key features of the monetary policy adopted by the central bank to address the distress of household enterprises during COVID, guys? Nice. Okay, we'll think about this. During COVID, can you all tell me? Now, this you will not be repeated in your year, don't worry. During COVID, did they want to contract the economy or expand the economy? What would have their monetary policy stance be? Was it an expansionary monetary policy or like a contractionary monetary policy? During COVID, businesses are shut and everything. They want to expand the economy, right? Not to contract the economy. The economy has already contracted. So what they want to do is they want to have a expansionary monetary policy. Now you can't write everything expansion. You'll write the what things that they did, guys. Okay. So during COVID, there was no inflation. Right? After that, inflation kicked in. Okay. So what can they do? What did they do? They reduce the policy interest rates. Now you have to give numbers. You can't just say what they did. So these policy interest rates, Lamai, during COVID, it went down to how much? Number? What was the lowest policy interest rates were at? It's there in the table that I have given you. Remember, I've given you all a timeline. This is how the policy interest rates went from here to here to here to here. I showed you here. In COVID, they reduced. How much did they reduce? Policy interest rate. 2 and 4, if I'm not mistaken, right? So standing deposit facility was at 2%, standing lending was at 4%, right? It came down there. Then SRR was reduced. SRR was reduced to how much during COVID? Now, SRR was reduced to a 2%. Then what happened with this, Lamai? They also had interest rate caps. What are interest rate caps, Lamai? Interest rate caps are the central bank says, look here, commercial bank. So for certain loans, let's say mortgages, pawning, or let's say overdrafts, the central bank will say, okay, for this type of loan, there is an interest rate cap. Highest you can charge is this much. You can't charge more than that. So, they can talk about that. Okay. Current monetary policy messages, I'm not going in to go there because I've talked about that so many times. Okay. So you can have interest rate caps. They did things like that. Then also in terms of what else? Interest rates are kept not really qualitative. It's also more like a quantitative thing. They come and say, look here, highest you can charge is 8% for let's say a housing loan. Don't charge more than that. They're trying to bring the interest rate down. And also, guys, they had moratoriums. What are this? What are moratoriums? For example, guys, debt moratoriums. Now, for example, during COVID and all, so many people were struggling to pay off their loan installments and all. Nilamai. Okay. Now, hard to pay, like the fellows who have got leasing and all, three-wheel drivers. They can't pay their three-wheel lease because, they don't have any hires. Countries in lockdown, so how to pay the lease? Can't pay, right? Even people who have taken household loans, right? These poor people. So what the central bank did is they told the banks to provide debt moratorium. That means, like, for example, for a grace period. Let's say now during others you have to pay every month, Nilamai. So during, let's say, lockdown, okay, for the next 6 months, you don't have to pay your loan installments. After that, you start paying. That's what you call debt moratoriums. They have given debt moratoriums for certain loans for certain periods. That's how that works. So all of those were what? The things that they did during COVID-19 to help boost the economy. Okay. Then a little bit about the opposite, guys. Please go and do your search. It's there in the central bank report and all, guys, as this thing. So during the economic crisis, right? During the I'm not going into detail. This is what they can test maybe in 2022 during the crisis. Same measure of house rent. I'm not very sure. Okay. So economic during this, right? When they had rising inflation, what did they do? They increased the standing deposit facility rate and the standing lending facility rate, right? Back your answers with numbers. Don't just say they increase this, right? That is the very basic answer you can give. Remember, I have given you all the timelines and all. This day they did something like this, like then they did something like this, then there was a huge hike in that, things like that. Then you can talk about how they increased the SRR. Then you can talk about how they had, let's say, even margin requirements, right? For imports and all, they had margin requirements that also kind of helped with reducing the amounts of imports and imported inflation. Remember, I told you they had a margin requirement of 100%. Commercial banks, if you are importing, you have to keep 100% of that amount in the bank, and then only you can import. Remember that story? Margin requirements. Then what else did they do? Right. Okay, in terms of even open market operations, right? They had open market operations. Then even they sold a lot of treasury bills and bonds. That happened. So you can give in stuff like that. Go through my answer. I'll give you a more updated answer also in one of the future mock exam papers. You can go through, and it's there in the CBSL report, guys. Go to the CBSL report 2022. Okay, there is a chapter on monetary policy. At least read the summary that is in the chapter. Okay, so definitely it must. You can get a question. Okay, go through. Done. That's question 4. Is that okay, guys? 2021. Same. Not hard, right? First one had the functions of money. Second had factors that might affect the demand, asset structure, and then COVID-19. Same.